Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Jeff S., Paul M., Todd A., and Dave V. On the program today, we have a returning guest back to update. Luke Alexander is with us. Luke is the president and CEO of Newcore Gold. The company is focused on advancing its Enchi gold project in Ghana, West Africa, which it has a number of initiatives underway, including resource expansion and infill, further exploration drilling, and ongoing prefeasibility study work that is expected to be finished up later this year. Newcore Gold is listed on the Toronto Venture Exchange under the symbol NCAU and also on the US OTC markets under the symbol NCAUF. Luke, it's good to have you back on the program. How are you, sir?
Yeah, thanks, Andrew. Great to be back on.
Yeah, it's great to have you back, Luke. Good to chat and update on a few things here with Newcore. You guys have a lot going on to start the year. Drill results coming in, news out there on the financing, a gold price that's acting pretty well here, and so that's good to see. Before we get into Newcore updates, Luke, it's always good, I think, to get your take on the market. What do you make of the market action so far for the gold juniors in 2025? We're 3 months in here. And how do you see really the rest of the year going based on what you're seeing out there?
The year started off, I'd say, as busy as I can remember and sentiment as positive as I can remember in recent years. I mean, one example of that is we were at the Indaba conference in Cape Town earlier this month, and investors there were extremely positive and bullish on the sector. So that's a market change from the last number of years where you'd start most conversations with people commiserating about portfolios and positions and all the rest of it. Everyone was kind of walking into the meetings extremely positive, looking for new opportunities, ideas, and ultimately looking to put money to work. That's a real change in sentiment that I've noticed to start the year, which is great. Obviously, the sector as a whole has performed well, and it's been outperforming the broader market. So that's that's encouraging as well. And for companies like Newcore and Newcore specifically, you typically see the money come into the top end of the market first, and then it starts to work its way down. So I see us as extremely well positioned to, take advantage of a strong market. And I think one example of that would be, the capital raise, which I'm sure we'll talk about. That was well oversubscribed, deep-pocketed, long-term focused investors coming into that. It's a real indication as well in terms of a lot of the hard work we've done over the last few years being rewarded and recognized. So overall, to start 2025, the market's as strong as I've seen it. And if you look at some of the forecasts coming out of the major investment banks and the gold prices that they're talking about for this year, if that plays out, it'll be an extremely robust year for a lot of companies.
Yeah, thank you for that, Luke. And good to hear some of the insights on some of the conferences you're attending and transactions already on the M&A front out there to start the year. We've seen obviously the Equinox Caliber deal come out as well. And then I think also companies like Newcore that has constant activity happening at the company, very positive for that end of things. And then, obviously some of the smaller juniors out there that don't have much activity happening are still pretty beat up, but we'd expect to see it continuing in 2025, given some of the broad market conditions and then also the shakeup in the various markets out there with policy changes that we're seeing come out.
I do hope the market continues to be selective and picks, companies that have good projects, that have real exploration upside, that are driven by strong teams like Newcore. Because, one thing that I think has hurt the industry and the sector in the past is that, when the market opens, a lot of projects and companies that probably shouldn't get funded do get funded because there's easy money out there. So, I do hope that we continue to see, investors being selective in terms of the companies they're choosing, because ultimately funneling the capital into those winning companies is what ultimately then creates, outsized shareholder returns. So there's a balance there in my view. And I think, again, the fact that we got funded highlights that we're one of those companies that, institutional investors and others see a tremendous amount of upside in. But I hope the taps don't open too much.
Yeah, it's going to be interesting because you have the broad market conditions play into this. And then I agree with your view on this. Investors in the junior sector have to be disciplined and should remain disciplined. I think you and I both know that at some point it gets out of hand, but the concentration of capital is important towards the good companies out there. And you guys are definitely in that development category in a jurisdiction that makes a lot of sense, to where, in addition to the company specific drivers and news that are happening, folks will hopefully place their money with good, responsible management teams and good projects that can be actually brought to production and see cash flow, which is obviously the goal here. Drill results. I want to talk about that first. You guys have reported a couple different drill results over the past few months, and I think that this continues to demonstrate consistency and expansion of the Enchi project overall at the various deposit zones. Just cover briefly for us those results, what you see as the key items out of there, Luke, and then really what investors can expect, because this is being expanded and things continue here for the months ahead. Warm investors up to what they can expect on the drilling front in the coming months.
Yeah, so we kicked off a 10,000 meter drill program in Q3 of last year, focused on resource expansion and resource conversion. So we've now released about 10,000 meters of drill results. When we last spoke in December, we would have chatted about, the fact that as part of this drill program and the results that we put out, we actually hit our highest ever grade meter intercept, 204 grams over a meter. Within that same press release, 3.4 grams over 28 meters. So we've had a lot of very good results come out. That's encouraging. If you look at our most recent set of results, which we put out on February 28th, we intercepted 1.28 grams over 63 meters, and that's from 9 meters below surface. So really shallow at surface intercepts within the oxide transitional category. Within that same press release, we intercepted 2 grams over 23 meters. And encouragingly, we continue to hit nice high grade on our project. So 5.5 grams over 8 meters from 16 meters below surface. So lots of areas where we want to go back and chase some of the higher grade, but that consistent near surface results that we're getting is going to really help convert the ounces that we're looking to take us from a PEA to a PFS. So we're extremely pleased with the results that we've had out thus far. And encouragingly, back to talking about the market a little bit and tying some of our drill results into that, if you look at that press release that we put out on January 30th, where we intercepted 1.85 grams over 62 meters, again, that was from surface, from 1 meter. And within that, we intercepted 8.4 grams over 10 meters from 13 meters below surface. On the back of those results coming out, we were up between 10 and 15%. So that's one of the first times that I've seen the market really react to positive drill results in the last few years. And I think that again talks to a little bit of the sentiment change that we're seeing in the market. So we've had a lot of really good results and lots of areas that we want to ultimately follow up on. And I'm sure we'll talk about it in a bit more detail, but that's part of the reason why we've obviously expanded our drill program from 10,000 to 35,000 meters on the back of the financing. So lots of great results, and we're expecting to have drill results coming out through the rest of 2025. So lots of news flow to come.
Luke, that sounds good. And of course, there'll be probably some updates on some of the PFS work that's ongoing as well. And I think what's important here is, you mentioned the market reaction. These are consistent results that are making a good production profile on a mine. It's not, we've got 100 grams over 1 meter. That's not a mine, right? I think that's really important to point out here for the audience, is this is consistent results for the type of operation that you guys want to put together here. And so as you guys continue down this pathway, investors are going to continue to be more and more serious about this, and that'll result in a proper valuation for this company. So early days here for what you guys are putting together.
Yeah, absolutely, Andrew. And I think I'll just jump in and comment there because it's a great point that you raise. I mean, one of the things that excites me most about Newcore is the huge optionality that we have within the company that you rarely find in a company of our size. So, as you've highlighted, those consistent grades, there's a mine here. We put out that PEA in 2024, which outlined an extremely robust project. The pits, the ounces that we have within that mine plan are obviously pit constrained ounces. The economics at a 2350 gold price are after tax NPV of 632 million, after tax IRR of 92%, and just over a 1 year payback on that project. So we've already outlined and demonstrated that we have an extremely robust project here. Our motivation to take it from a PEA, which are the numbers I'm referring to a PFS, is really, de-risking the project further, giving the market and giving, other corporates more confidence in what we've got. So, resource conversion is something that we obviously need to do. Hydrological work, geotech work, a little bit of additional met test work. These are all elements that need to be completed to, take it from PEA to PFS, and that's all work that is ongoing. So, that project sits there. We see a fundamental re-rate happening by taking it from PEA to PFS, and a huge amount of cash flow being generated. Again, at 2350, you're looking at 855 million of after-tax cash flow generated from that project. Beyond that, when I talk about optionality, what I'm talking about is we have true district scale exploration layered on top of that. I would argue you're getting all of that for free at Newcore. So we've got a very buildable project that we outlined in the PEA that we're moving to PFS. That work is ongoing. Beyond that, the district scale exploration is something that we're extremely excited about. So this additional 25,000 meters of drilling that we're going to be doing, a big portion of that will be focused on unlocking the value within a lot of that district scale exploration. So again, optionality, I think, is something that shareholders should be really focused on and excited about with Newcore.
The work here to expand and improve production profile, and that'll get done in the coming years as well. This has got to be on the list out there for mid-tiers and majors that are operating in the area. This is going to definitely grow the interest level. So I appreciate that thought. And then, of course, the exploration upside, which, again, you guys haven't scratched too much of that either yet. You guys did just wrap up an equity financing. You guys upsized that to 15 million Canadian dollars, led by Paradigm Capital. Cover off where you plan to allocate. I know this will go mostly to the drill program out there that'll be going throughout 2025, but just talk a little bit about that capital allocation as well as the post-financing capital structure, and talk a little bit more about the class of investors that came in here.
Yeah, so with the financing on the back of the Indaba conference and a stopover in New York, we had a couple of very large, long-only institutional investors who we've been in discussions with for the last few years, who expressed some significant interest in Newcore and wanting to become meaningful shareholders of the company. So we saw that as an opportunity to raise some capital to obviously expand the overall drill program. So we went out to raise $12 million. That was quickly oversubscribed with the support of a number of our existing institutional shareholders, as well as some additional institutional investors. So we decided to upsize it to 15 million so we didn't have to cut people back too much. And with that capital, we're obviously announced that we're going to expand the overall drill program. So our institutional ownership goes from about 45% to 55%. So great to see, big, long only new investors wanting to get involved in Newcore, as well as that continued support from our existing shareholder base. So with that capital, again, we've increased our drill program from 10,000 meters to 35,000 meters. based on the internal kind of modeling that we're doing, we feel that we're ahead of where we want to be from a resource conversion perspective. So as we get that resource conversion drilling done, then we will, move towards, call it, pure resource expansion drilling. So within the 10,000 meters, we are kind of focused on obviously pushing holes beyond the pits and adding some ounces around the edges. But once the conversion drilling's done, we will really focus on, call it, pure resource expansion drilling, which is stepping out along strike, targeting new areas, going back to previously drill tested areas where we may have put 2 to 5,000 meters in, made discoveries, but don't have the drill density yet to wrap resources around them. And then obviously, if you look at the average vertical depth of the pits that we've drilled to date, we're only down to about 75 meters. So the opportunity for us to drill deeper and chase some of these high grade structures that we've identified across our project is something that we're extremely excited about. And we see as a good use of capital now that, again, we're starting to see the market come back and reward companies for exploration drilling. Our view as major shareholders of the company, management and board, we own 15% of Newcore. Our view was that going and drilling exploration targets and not getting rewarded by the market was not a good use of capital. But now that, again, we're starting to see the market reward drill results, we've got a huge number of targets to go after, and we're excited to be starting to be in a position to drill some of those.
And good to see some of that actually happening now. And then definitely interested. I mean, the depths here, there's just a lot more to test further down. So looking forward to seeing what you guys put together on some of those deeper drill holes. One of the other things you guys have going on here, why you guys are doing all the various drilling, you're putting together in progress here is the PFS, which should come out sometime later on in the year, second half. You guys also put out some met test results in December. Those look pretty good. Some more of that's happening. Just talk a little bit about the other work that you guys have going concurrently to all the drilling results that'll be coming in and progressing. Tell us a little bit about where you think, obviously besides resource growth, will surprise coming out of the PFS. Is there any areas that you think will be a surprise, or areas that you think will be of note to discuss here?
Yeah, thanks, Andrew. That's a great question. So when we look at the PFS work that we're doing, as you mentioned, Met work, we put some very positive results on that. I mean, from a Met perspective, we've done now 24 column tests at 60 days or more, and we're averaging about 92% recoveries in those results. There are some additional Met tests that we want to get done, looking at a little bit larger, coarser size and different cement levels. We just see that as an opportunity to further strengthen the work that we've done from a Met perspective. So we are continuing to do additional Met work. We'll look to get that done by Q3 of this year. And then that work obviously helps feed into the PFS. Beyond that, condemnation drilling, for example, going across where the heap leach pad is planned to be and making sure that there isn't mineralization in that area. We're also doing hydrological and geotech work. Again, these are areas that need to be completed to give the confidence for the engineers to move from a PEA stage project to a PFS stage project. And then we're also doing some additional environmental and social work on the project. So all of that work is happening in the background, as well as obviously the more newsworthy, let's call it, work, which is the drill results, which we've been putting out on a consistent basis. So all of that's happening. In terms of areas for improvement, which within the PFS, my view is if we can replicate the PEA, that is a phenomenal result. If you look at the economics that we've got within the PEA, I've challenged you, Andrew, and you have yet to come back to me with a project that's got economics as good as ours that sit within a company of our size. And, our view is that, again, if we can replicate what we did with the PEA, that is a tremendous result for Newcore and our shareholders, because it just de-risks the project that much further. And again, it should lead to a re-rating in the stock. So we're not really looking for any major areas of improvement, but that's because we don't need any major areas of improvement given how robust the economics are in this project. Yes, things will move around a little bit and costs will go up in some areas, but we are also conservative in a number of other areas. Let's just use one example, crushers. We currently have the crushers going in years 4 and 5. That assumes that 50% of the transitional material needs to be crushed. Andrew, if you and I were standing in our core shack today and you were looking at the boxes of core, you'd probably agree that only 20% will most likely need to be crushed. So we could potentially push those crushers out by a year and, tweak things that way. So there might be some tweaking around the edges. But really our goal is to, closely replicate what we put out in the PEA. And we think that will be a great result for Newcore and our shareholders.
No, I have not been able to come up with a comparable that is superior or even equal to what you guys are doing here. There's still some more looking. I need to allocate some more time there, to be honest with you. But on the ones that I do know of, our office doesn't cover all of them, but definitely we know of a few. You're absolutely correct in that thinking. And then also on the expectations, definitely we're going to, just with the results we've seen since the PEA, there's very good things coming just with respect to looking at production profile, expansion. Obviously, mine life will be considered. I'm sure by the time we get into definitive that there'll be quite a few changes, but you're absolutely right. If you guys can mimic the PEA, which I think you will, and then also on the downside's well protected, I guess, is what I would say here. And the project, as we've talked about in the past, it's a simple project. It's not technically complex within gold mining and definitely within Africa. It's not a complex project. So there's a lot of positive things going here that I wanted to re-highlight for the audience to understand as they evaluate this equity and evaluate what you guys are doing as a management team. And then, of course, the quality of the project. I want to come back to community in just a second because you mentioned that. I want to ask you a little bit about that. But another question that came in here, Luke, completely off topic here, but with the company progressing well down the development pathway in steady fashion, is there any desire to move off the venture and go on to the TSX in the coming year, 2 years? What do you think on that uplisting potential?
Yeah, at this stage, we don't see any real urgency to move to the TSX. I mean, if you look at again our institutional shareholder list, I mean it's second to none out there, and they're obviously all very comfortable with us being listed on the TSX venture. I think as we grow in size and we start to get to a point where we're looking at index, potential index inclusion and those types of milestones, then being on the TSX could make sense from that perspective. But at this stage, we don't really see a lot of benefit, given the additional cost that's associated with being on the TSX.
I appreciate that, how you guys are looking at that, because that's always important. And as you guys get considered within some of these ETFs and indexes, that'll be a consideration. So we'll see how that progresses on that front. And then, look, just on another thing here with government relations, just on that front, maybe you can talk a little bit about government relations. Any updates on that front? I know that you guys already have a good relationship there in Ghana, but any updates on government relations? And while we're on that, just a bit of educational for the audience who maybe hasn't looked into this. Talk a little bit about the tax regime in Ghana for a gold producer. Looking forward here, just comments on that general regime and how it works in Ghana.
Yeah, so Ghana is Africa's largest gold producer. It's the sixth largest gold producer globally, just behind Canada and the US. So it's got a long history of gold mining. You've currently got three of the top 10 largest gold producers, soon to be four of the top 10 largest gold producers with significant operations there. Newmont is investing another $1 billion into Ghana to expand their Ahafo project. That will take it to over 1 million ounces of production and be their second largest gold producing asset globally. They then sold their second asset in Ghana, their non-core asset, the Akim asset, to Zijin. Zijin paid $1 billion for that asset and are coming into the country. We've then got Anglo and Goldfields, who again, both top 10 gold producers with significant operations in country. So there's a lot of mining experience and production in country. So the government is obviously very familiar with mining. It's important for the economy. It's important for the tax base. We're well positioned. If you look at Ghana as a whole, we'd be one of the top two most developed projects beyond projects that are in production today. So we see, a tremendous amount of government support because they want to see mines built. They want to see mines put into production given the benefit there is for the country. So as a result, we see a lot of support for our project. We're actually going to be presenting in the Spotlight on Ghana event Tuesday morning during PDAC, and anyone who's listening who's interested in joining for that, I would welcome them to come and join. The Minister of Mines will be there, the CEO of the Minerals Commission, who are the ones who take care of all the licensing in country, will both be presenting on that. I will also be presenting alongside them and a panel of other companies. So again, there's lots of support in country for mines to be built and ultimately into production. From a tax perspective, the government has a 5% royalty, which is standard across the country. They then also have a 10% free carry, which again, standard in country. From a tax perspective, it's a 35% tax in Ghana.
That's very competitive. It's straightforward. It's certainly a jurisdiction that you can rely on. It's predictable. Whereas we've seen, obviously, in other jurisdictions, maybe some in Africa for sure and elsewhere, sometimes the policies change quite quickly or they make it up as they go along and there's no real certainty. Ghana's definitely not one of those countries from a gold production perspective. So
it goes back to the first part of my answer. I mean, follow what the majors and mid caps are doing. And when you see the concentration of mining majors and mid caps that you have in Ghana, I think it speaks to obviously the pro mining jurisdiction, but also friendly from a taxation perspective or reasonable from a taxation perspective. But then also security is another big thing. We're very safe in Ghana, and obviously that's a big differentiator as well. So it's a very good jurisdiction for us to be operating in.
It's good to warm the audience up to that. Of course, I encourage the audience to do some of their own work on Ghana, but definitely, Luke, that's a good starting point. Take a look at what the majors are doing, what the mid tiers are doing, and the activities in the country. A good jurisdiction when you look at Africa. Luke, one of the other things, just on community work, you mentioned social community work. Anything on that front that you want to update on? We've talked about it before, but any updates on that front?
No major updates. I mean, we've had a very strong working relationship with our local communities since we've been involved in the project. When we go into new areas, we offer locals jobs first. We put in water wells. We, do a lot of kind of work with the communities. We're one of the larger contributors in our local area. One thing is that we consistently get asked is, when are you putting this into production? So they're very keen to see us build the mine because, again, Ghana's a small country. It's got 5 million ounces of production. And, our local communities can see the benefit that mining has brought to a number of other parts of Ghana, and they want to see that benefit in their region as well. So we've got a lot of support from the local communities, as well as we've discussed at a national level, a lot of support to push our project forward.
Good to hear you guys are continuing efforts on that front because that's a very important component. And of course, some of the pre-work stuff on permitting, environmental work that goes along with that, not to mention the community work that goes from day one and then ramps up from there. So appreciate your thoughts and updates on that. Well, Luke, any other things you want to touch on before we wrap up?
I think we covered a lot of topics, starting at 20,000 feet in terms of the overall market sentiment, then diving into the project. We've covered the bulk of it. I mean, maybe just as a quick recap, obviously we've announced this expanded drill program. So we've gone from 10,000 to 35,000 meters. So we will have a lot of drill news flow over the next number of months and right through 2025. we are very aggressively working on all the additional aspects of the project that need to get completed so we can take it from a PEA to a PFS, and we see a significant re-rate for shareholders as the market starts to price in the value of a PFS stage project. So yeah, it's going to be an exciting 2025.
Appreciate you coming back on to chat here. And for potential investors who are listening in, the company has a market capitalization of about 78 million Canadian dollars today. Why should Newcore Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
Newcore Gold, it's backed by a management team and board with a proven track record. We've got deep pocketed long term institutional investors who invest through the cycles, who have been funding the company. We're now 55% institutionally owned, as well as we've got strong support from the investment banking community with two investment banks, Canaccord and SCP, both covering us. So I'd encourage you to go and get that research if you have access to it, as well as Paradigm, who monitors the company closely. And then optionality. We've talked about it a little bit, but I think the optionality that Newcore provides for shareholders is something that's very rare to find. We've got a very buildable project that fundamentally, in my view, is undervalued in our $78 million market cap relative to the value of the project. And then beyond that, I would argue that you get district scale exploration upside for free. The money that we recently raised in the expanded drill program will allow us to target some of that district scale exploration. And that's something that we're extremely excited about. So optionality is probably the big thing that I would highlight to investors and prospective investors.
Luke, thank you for that. And also, I think for a lot of folks out there, a development stage company like this that has a pathway to production in the coming years, I think is also an important piece as the gold price continues to improve here. And how can folks contact the company?
Yeah, so we're very active on social media. So I would encourage you to follow us, whether it's on LinkedIn or Facebook or Twitter or X or any of those various platforms. We put a lot of content out there and have had very good feedback on that content. Through our website as well, reach out, email. We're always keen to engage with existing and prospective investors, and we're happy to set up calls or answer any questions. So, through any of those different channels, I would encourage people to get in touch.
Luke, thanks for the time today. Best of luck on continuing work at Newcore, and we'll get back in touch in the coming months.
Yeah, thank you very much, Andrew.